Hi everyone, for the past few weeks I've been sitting with Easy Properties and figuring out what's going for what. Because on the app I couldn't see all the details I had to, so I went into my PC. So what we're going to do is we're going to go onto my portfolio on the PC and I'll explain to you everything thus far. Before we go into the PC, I want to let you know that I'm not a financial advisor. I'm not suggesting any new trades for you. I am telling you what I think I would do, or I'll make suggestions if you want something a bit more safe, try this, but I'm not a financial advisor. This is a friend to a friend. If you want financial advice, go to a financial advisor and not some random guy on YouTube. Alright, here you can see I'm at my Easy Properties dashboard. This is what I've invested in total. This is where everything's at. Right, that's my growth, and this is what I've received from the rental dividends. Alright, now I want to show you my experience and then I'll tell you my thoughts, and then you can decide for yourself what you would like to do. But here with my biggest investment is Polo Fields. I've invested about $4,000. That's what I get from the rent, and this is where the current value is. Now, my problem came when I invested. I bought a share for R1. All right. Then it didn't take too long. They did an evaluation, and the share price went to R1.07. Okay, so this evaluation was done 12th of April 2021. Okay, so with that the price increased quite hectically, quite a lot, and I thought, this can actually work. This will be nice if the evaluation keeps growing, and I understand that the evaluation will probably grow in the next 5 years or 10 years but if I look at my rental dividend, which is 2%, 2.83%, this is what I'm getting from this property. Now I know you can't expect much from $4,000 investment. So if I check the dividend calendar and I check here on the historical dividend payments here, you can obviously, if you scroll down, you can see when, like Polo Fields, that's the next one. If I go to historical dividend payments, I scroll down to Polo Fields, this is what they paid, 1 cent, 1.1 cent per share. Here they say dividend paid per share. So that isn't a lot. As you can see, this is more than a year now. I started just before April, and let's say we work on a year and 6 months, I've had 8% growth on my investment. And I obviously have, where are the rest? Yeah, here's the rest. I've invested R100, I guess just for fun, $4,000 and 780. The reason I invested this much here was I wanted to invest $5,000 in Polo Fields, but it didn't work out. They didn't sell me all those shares, so I just bought shares here. And with all of them, there's definitely growth. This one per share is, 112 cents, a bit better. But for me, 8% growth after a year and 6 months. I understand that we've gone through COVID and the real estate market isn't always what it should be. But if I go back to my Easy Equities account, I made a video recently saying that I'm starting from scratch, starting new. Now, this is my profit, R81. It's 2.8%. Now that looks stupid, right? But Let me show you something. It's minus 47.26 on the crypto. This is when, let's go back a year. This is what happened with crypto with COVID and some extra things, but this is why my portfolio, you know, says only plus 2%. If I close this, these investments I did quite recently, I don't know if I can see it straight here. No, it doesn't matter. But here I'm seeing 13%, 2.5%, 16%, 6%. Now this is, I bought this when the market was quite down. So I understand that I'm getting some growth. But this portfolio, I mean, in a year and a half, it should look much better than this. Maybe something will be down, but I almost want to say I can assure you it's going to be more than 8%. I know we can't say that, but I think my opinion in a nutshell is that I think Easy Properties is a very good idea if you want safe and consistent long-term growth. Now, I also think your equity should be long-term, but I think if you don't know the market or you don't necessarily want to spend time with that, I would maybe look at Easy Properties. Or if you just know sort of the market or sort of what's going on, you should see some gains. And I know I can't guarantee that, but I think, in short, sorry, I feel like I'm stretching this out, is that I think I'm just expecting more from Easy Properties. And I think if you'd want to be more safe, maybe try Easy Properties. There's obviously safety with the equities as well, but with my experience, I would rather just take that $4,000, $5,000 and bring it to the equities. Because I'm more in the game and I try to see what's going on and figure out what to buy, I think I would rather do that. Alright everybody, there you have it. It's fairly easy, it's fairly open, it's fairly clear on what I've been getting. I do think that the properties will show something better in the future, especially long run. So if you're looking for something like that, maybe it's for you. Go try it out. I do hope you have a better idea of this. Other than that, cheers.